Good morning, I'm John Marino. Let's get right to our top stories this morning. At this hour, we're looking at Abercrombie and Dollar Tree earnings coming in before the market opens today. And U.S. stock index futures are up but treading water after Wednesday's session closed down sharply on renewed fears the Federal Reserve will trim back its $85 billion a month bond buying program. From the NASDAQ market site in the heart of Times Square on a chilly Thursday morning, just 1 week till Thanksgiving, this is your global markets report. Overnight in Asia, Japan's Nikkei ended the day big in the green, and for that and more, we shift to European market action as we approach the midday of trading there. We're going to bring in Laura Board, and she's in the Deal's London newsroom with the latest. Laura.
Morning. Yes, John. Asia reacted very negatively to those Federal Reserve minutes that came out yesterday, really interpreting it in a glass half empty fashion, even though arguably they were quite a circumspect set of comments about the outlook for the US economy and the tapering of the bond buying program. All indices in Asia, bar Tokyo and Sri Lanka, were down. The Nikkei 225, which tends to do its own thing, was up 1.92%, aided by a further decline in the yen. The Hang Seng, however, down 0.51%. Here in London, the FTSE has turned a corner and is trading little change right now. The DAX in Frankfurt down about 0.3%, and the CAC 40 in Paris down 0.4%. China manufacturing figures for November spooked people a little. A very closely watched index pointed to an unexpected decline. In the Eurozone, that same index provided by the market research agency was up in terms of manufacturing. The service sector picture in November not looking too great, however. One company worth noting is Atos in Paris, the computer services company. PAI Partners, the buyout firm, has sold or is intending to sell roughly 10% of the company. It seems to have made a tidy profit on that investment, having bought in June 2008 at about 39 euros per share. The stock is trading about 60 euros per share right now. However, that is sharply down on the day. Back to you, John.
Thank you very much. That is Laura Board checking in for the Deal's London newsroom. Back here in the U.S., let's take a look at the stocks that you need to be watching today. The first of them is Sears Holdings, and it's been impressive this year, posting solid gains up nearly 50% through almost 11 months. But you've got to wonder why, with expectations for this morning's quarterly earnings expected to come in at a loss of $3.13 a share, and that's compared to losses of $1.99 for the same period this time last year. Moving along now, Target is not bleeding money like Sears is, but shares are up only less than 13% so far this year. And Wall Street forecasts are for earnings of 63 cents for the latest quarter. That's down substantially from 90 cents a share that it earned in the same period last year. And another stock that we're going to be seeing reporting results today, and one that has seen a lot of gains so far this year, up 100% in 2013, is GameStop. Keep in mind that with new consoles coming to the market right now, GameStop shares will be closely watched this quarter as well as next. Wall Street forecasts are for earnings here of 57 cents a share. That compares to earnings of 38 cents a share for the same time last year, and the stock is up by more than a point leading into the trading day today. Our action alert pick this morning coming from Jim Cramer now. He's taking a new position in Bank of America. Cramer says that he's targeting $20 a share for B of A, and he's bullish here because he's highlighting 19% year-over-year growth in commercial lending with B of A, and he's seeing $1.6 billion in expected cuts coming by the end of 2014. So far this year, shares are up 30%. That's it for this morning. Be sure to keep an eye on TheStreet's website all day for the latest in breaking news and earnings, including Gap and Pandora after the bell today. I'm John Marino for TheStreet. Have a great day.